9:22 a.m. 11/9/2013. Good morning, MMTs. What we have before us is a daily S&P 500 index. One of the things that I'm going to point out on the daily chart is where I'm going to draw a trend line where the last bottom was. I'm going to draw a trend line where the last high was. This is where we had that correction. We rallied up here to the highs. We pulled back to this low bar and tested what we call the 20-day simple moving average of 1749. This was on, when we tested that 1749, that was on 11/7. And what ended up happening is that we made this counter rally on Friday. So we were top end heavy. We were calling for a pullback in the bull run. This is the neckline of that breakout, is this lower support level, which is right above the 50-day simple moving average. The 50-day simple moving average will be where these indexes eventually pull back and test. That's at 1710. So basically this was the pullback day on a daily bar. And let's show it from a closer snapshot right here. This daily bar reversal is greater than the upside. This is where the bulls came back in, slightly got it above the 10-day simple moving average. What this means is that there was a lot of buyers coming into the market. When we failed to go below the 20-day simple moving average, the short sellers on the S&P buy to cover. So they brought all of the stocks in the S&P 500. It was broad-based buying in the S&P 500 that got this big daily up bar. The S&P had a great move from the pullback. I can say that these tops here were very narrow range. Right here, that meant there was no commitment in the broader S&P 500 index in purchasing power. What it did mean was that there was a lot of selling and a test of the daily moving averages. We can clearly see that from our last weekend update, we made it clear that we're due from a pullback, because at that time we were in the overbought level areas where it's ripe to take profits. So basically what I will say is on 11/7, the red bar was 28 points reversal down in the S&P, which we haven't seen in quite a while. The upside to the S&P on Friday was 23 points. That means that even with the counter rally, it's 5 points less. So all eyes will be where that money wants to come in and buy. And we are in the earnings season, and we're winding down in the earnings season. What does that mean? It means that the broader S&P 500 have reported their quarterly reports. From a weekly perspective, I would like to show where the last 4-week breakout was. It was right here at 1650. We took out the tops very clearly. This is where that pullback happened when we said that there would be a pullback. We rallied and we're right up here on a weekly topping pattern level. One of the things is that most people feel that on a weekly level, the S&P made a movement from these bottoms. That's 4 weeks up, so this is the 5th week of that cycle. One of the things that we're looking at is that this particular, we're going to see if there's another big buy week. Does that bull want to kick right in there now that most of the earnings are out of the way? And we can go to a blow off top, and I can give you the number. It would be right up here. It would be right around 1790 on the S&P is where we're going to have a wall of resistance, where my pointer is right here. So we're clear. I'll just draw a trend line. There's 1790, 150 right up above it. The higher that we go, we are currently on a weekly level overbought. It's going to take a lot of money to come off the sideline to make these highs, but one thing that I will say is that you don't want to be buying at the highs. You want to be buying on pullbacks. One of the problems is that people that underperformed calendar 2013 with its massive bull rally is that they chased these stocks in an exuberant level. Here is where the rally started. We'll pull up way back over here at 1500 when it broke and consolidated here. We went up, we had pullbacks here, we had pullbacks here, and every pullback they have come off of that sideline. That means that this market, after 12 years of bear market, we've had almost a complete calendar year. We have 2 months left. And what that means is we finally have a year of bull. Be advised that there is a pullback coming. Every new high is going to get us that much more overbought. Pick your spots, pick your stocks, wait for the pullbacks, wait for support levels on individual names. It's a stock picker's market at this point, and the big money that bought this bull rally, they've been taking profits. So that's the weekly level, and once again, here's that daily level on the S&P 500. Beware that there will be a pullback at new highs.